Folks, I believe these five stocks under $2 are screaming buy right now. The market is in full panic mode. Fear is at extreme levels. And right now, the biggest opportunities are hiding in plain sight. Five stocks, all under $2, all with real businesses, all with analyst upside that will shock you. One of them has a drug already approved by the FDA that is generating real revenue right now. One of them just got a call from the most powerful company in AI, and the market has no idea yet. One of them is pulling something out of the ground that just hit all-time highs. One of them beat earnings by 43% on technology that could make injections obsolete forever. And one of them has revenue growing at over 100%, with a treasury strategy that Wall Street is only just starting to understand. I am not going to tell you which is which yet. But here is what I will tell you. The one I am saving for last is the one that stopped me cold when I first saw what just happened to it. And I genuinely believe that when you hear the full story, you are going to understand exactly why I saved it for last. Now I am going to present my case for each company, and then I want you to go do your own due diligence and be your own judge. Make sure you subscribe right now and hit that bell icon. Every single day, I bring you the freshest stock analysis here on Stock Alerts Daily. Do not miss a single one. Stock number 1. Now this company has been quietly doing something that almost no penny stock ever does, generating real commercial revenue from an FDA-approved drug. Not a drug in trials, not a drug waiting for approval, a drug that is already prescribed by doctors, already in pharmacies, already treating real patients with blood cancer right now, and the stock is at $1.55. Pause. This company has 3 core things working for it right now. First, the drug is approved and commercial. Their treatment received FDA approval and is actively being prescribed by oncologists across the United States. Real patients, real prescriptions, real revenue coming in every single quarter. Second, the market they own is massive. The blood cancer indication they are targeting affects tens of thousands of patients annually in the U.S., and they are the only company with an approved drug in this specific category. They own this market with no direct competition right now. Third, the pipeline is expanding. They are exploring their drug in additional blood cancer indications, which means the total addressable market could grow dramatically in the years ahead. Now the anchor catalyst. Just days ago, this stock surged 9% in a single session, on over $22 million of trading volume. $22 million. Pause. In one session. Pause. On a $1.55 stock. Pause. That kind of volume does not happen without institutional and smart money building positions aggressively. Now the analyst picture. 5 Wall Street analysts cover this stock right now. All 5 have a buy rating. Every single one. The average analyst price target implies 87% upside from current levels. Now, the earnings. Revenue has been growing quarter over quarter since commercial launch. Every quarter of growing commercial revenue builds the case that this is a real sustainable business, and not a speculative biotech hope. 5 catalysts I am watching. Catalyst 1. Revenue acceleration. Every new quarter of growing commercial sales builds the fundamental case stronger. Catalyst 2. New prescriber adoption. As more oncologists become familiar with the drug, prescription volume grows directly. Catalyst 3. Label expansion. Additional blood cancer indications being explored. And a successful expansion dramatically increases the total addressable market. Catalyst 4. Partnership opportunities. A major pharma partnership or licensing deal could unlock enormous value overnight. Catalyst 5. Institutional accumulation. Volume surges like this one signal smart money building positions at these levels. The big picture. FDA-approved drug, already generating revenue. 5 analyst buy ratings. 87% analyst upside. Pause. $1.55. Pause. Obviously small cap, real risks. But an FDA-approved commercial drug at this valuation is not something you see every day. The company is Geron Corporation, ticker symbol GERN. Check NASDAQ.com for the current price before making any decisions. And now for stock number 2. I said one of these 5 could make injections completely obsolete. This is that company, and it just beat earnings by 43%. Stock number 2. Imagine a vaccine. You swallow like a vitamin. No needle. Pause. No nurse. Pause. No cold storage required. Pause. Just a tablet. That is what this company is building. And if they pull it off, the implications for global healthcare are genuinely difficult to overstate. Their platform delivers vaccine antigens directly to the gut immune system, stimulating a broader immune response than a traditional injectable, while being dramatically easier to manufacture, store, transport, and administer. Flu vaccines, norovirus, COVID boosters, RSV, all potentially deliverable in tablet form. Now, the anchor catalyst. This company just beat their last earnings by 43%. Pause. Reporting a loss of 4 cents per share against an estimate of 7 cents. A 43% earnings beat on a clinical stage biotech under $1 is an extraordinary result. Pause. The special angle. This stock is already up 89% year to date in 2026. 89%. Pause. On a clinical stage biotech under $1. That kind of move signals institutional money positioning aggressively ahead of clinical data and potential partnership announcements. 5 catalysts I am watching. Catalyst 1. Clinical trial data. Positive data from any of their ongoing vaccine trials would be an immediate and powerful price catalyst. Catalyst 2. Partnership announcement. A major pharma licensing deal for the oral vaccine platform would unlock enormous value overnight. Catalyst 3. Earnings beat momentum. 43% beats tend to repeat when management is focused on cost discipline. Catalyst 4. Global vaccine demand. With geopolitical tensions at record levels, governments around the world are accelerating pandemic preparedness spending. Catalyst 5. Institutional accumulation. 89% year-to-date signals. Smart money is building serious positions here. The big picture. Oral vaccine technology that could change global healthcare. 43% earnings beat. 89% year-to-date. Analyst price target implying over 400% upside from current levels. Pause. 400%. Pause. Obviously clinical stage biotech. High risk. Binary outcomes tied to trial data. But 400% analyst upside on a company with genuinely differentiated technology is a story worth watching extremely closely. The company is Vaxart Incorporated, ticker symbol VXRT. Check NASDAQ.com for the current price before making any decisions. And now, for stock number 3. I said one of these 5 is pulling something out of the ground that just hit all-time highs. This is that company, and the math on this one is going to stop you in your tracks. Stock number 3. This company is not speculating about finding gold. They are not running exploration programs hoping to strike it. They are digging gold out of the ground right now. Pause. Selling it. Pause. Collecting cash. Pause. Every single quarter. And gold just hit all-time highs above $3,000 per ounce. Let me do the math for you right now. This company has production guidance for 25,000 to 30,000 ounces of gold in fiscal 2026. Their cash cost is around $1,500 per ounce. Gold is selling at $3,000 per ounce right now. 30,000 ounces. Pause. Times $1,500 margin. Pause. That is $45 million in gross production value, with $30 million in gross margin. Pause. For a stock trading under $2. Pause. The special angle. This stock is already up over 300% in the last 12 months, and already up 50% in 2026 alone. That is not speculation. That is a company where gold prices and production growth are doing exactly what investors hoped they would do. 5 catalysts I am watching. Catalyst 1. Gold price momentum. Gold just hit all-time highs above $3,000. Every dollar gold goes higher. This company's margins expand directly. Catalyst 2. Production guidance execution. If they hit the high end of guidance, cash flow surprises to the upside. Catalyst 3. Mine expansion. Actively expanding production capacity, which grows revenue in 2027 and beyond. Catalyst 4. Iran conflict gold demand. Geopolitical uncertainty is the single biggest gold price driver happening right now. Catalyst 5. Institutional discovery. At these prices and production levels, a single large fund initiating a position could move this stock dramatically overnight. The big picture: real operating gold mine, real production revenue, gold at all-time highs, 300% return in 12 months. Pause. Still under $2. Pause. Small cap, volatile, real risks. But a real producing gold miner at these levels with gold at all-time highs is worth understanding deeply. The company is TRX Gold Corporation, ticker symbol TRX. Check NASDAQ.com for the current price before making any decisions. And now for stock number 4. I said one of these has revenue growing at over 100%. With a treasury strategy Wall Street is only just starting to understand. This is that company, and the number I am about to tell you is going to raise some eyebrows. Stock number 4, 116%. Pause. That is how fast this company's revenue grew last quarter, not year over year. Pause. Quarter over quarter. Pause. 116%. Pause. And most retail investors have absolutely no idea this company exists. Here is what makes this story genuinely unusual. This is a thermal management technology company. They build systems that protect batteries in aerospace, defense, and AI data centers from thermal runaway. That is a real and growing business. But they also made a strategic decision to hold Bitcoin on their corporate balance sheet, sitting right at the intersection of advanced defense technology and Bitcoin treasury accumulation. 3 core divisions. Division 1, thermal management, protecting lithium-ion batteries from the most dangerous failure modes in modern electronics. Real aerospace and defense contracts, real revenue. Division 2, AI data center battery platforms. As AI computing demand explodes, the need for reliable battery thermal management in data centers grows directly alongside it. This company is positioned directly in that spending path. Division 3, Bitcoin treasury, accumulating Bitcoin on the balance sheet, turning the company into a dual play on technology growth and Bitcoin appreciation simultaneously. The anchor numbers. Revenue up 116%. Pause. Cash reserves exceeding $20 million and a pathway to positive free cash flow, projected for 2026. The special angle. Management just paused their ATM equity offering program. That means they stopped selling shares at current prices. Pause. When management stops selling their own stock, that is one of the most powerful signals in investing. They are saying, the stock is worth more than this. Pause. 5 catalysts I am watching. Catalyst 1. Bitcoin treasury growth. As Bitcoin rises, the balance sheet grows stronger, and the stock gets a Bitcoin premium valuation. Catalyst 2. AI data center contracts. Explosive AI computing growth means massive demand for thermal management solutions in data centers. Catalyst 3. Aerospace and defense expansion. New partnerships combining operational leverage and increasing service revenues. Catalyst 4. Path to free cash flow positivity. 2026 target for positive free cash flow, a significant fundamental milestone. Catalyst 5. Revenue momentum. 116% quarterly growth. If that trajectory continues, the valuation story changes completely. The big picture. Revenue up 116%. Pause. Bitcoin treasury strategy. AI data center positioning. Analyst price target implying over 242% upside from current levels. Pause. 242%. Pause. Small cap. Volatile. Real risks, but 242% analyst upside at under $3 is a story worth understanding completely. The company is KULR Technology Group, ticker symbol KULR. Check NASDAQ.com for the current price before making any decisions. And now, stock number 5, the one I saved for last, the one that stopped me cold when I first saw what just happened to it. I said one of these 5 just got a call from the most powerful company in AI, and the market has no idea yet. Pause. This is that company. And I think by the time I finish telling you this story, you are going to understand exactly why I saved it for last. And stock number 5. When the most powerful company in artificial intelligence decides to call you, you have to understand what that means. They do not make that call for publicity. Pause. They do not make that call to do favors. Pause. They make that call because they looked at what you are building, and they decided, this is real. This fits into the future we are building. And they just made that call to this $2 robotics company. Pause. Now let me tell you what this company actually does. They build AI-powered service robots for restaurants, hotels, hospitals, and commercial facilities. Real robots, already deployed, already generating revenue, already operating in real commercial environments right now. Not a prototype, not a demo. Real robots, doing real jobs, for real paying customers. 3 core product lines. Product 1, Atom, a dual-arm cocktail and beverage preparation robot, already operating in hotel bars and entertainment venues with real paying customers right now. Product 2, Dust E, an autonomous commercial cleaning robot already deployed in hospitals, schools, and large commercial facilities, generating real revenue under real contracts right now. Product 3, Matra D, a restaurant service robot delivering food to tables, already in commercial deployment across restaurant chains. The anchor catalyst, the partnership. Pause. When the most powerful AI company on the planet signs a collaboration agreement with a $2 robotics company, they are signaling that this technology is real, the commercial deployment is real, and the opportunity is real. This is not marketing. Pause. This is the most powerful name in artificial intelligence, putting their reputation behind the physical AI infrastructure of the future. Pause. Now the earnings picture. Revenue grew 19% in fiscal year 2025, 19% growth on a $2 stock with real commercial deployments is a fundamentally different risk profile than a speculative penny stock with zero revenue. 5 catalysts I am watching. Catalyst 1, partnership execution. As the collaboration produces commercially deployable AI-enhanced robots, the valuation story changes entirely. Catalyst 2, hotel and hospitality expansion. Major hotel chain partnerships could generate recurring revenue contracts worth multiples of current annual revenue. Catalyst 3, healthcare facility contracts. Hospital and senior care facility robots have the strongest unit economics in the entire service robot space. Catalyst 4. Revenue growth acceleration. 19% growth, with the most powerful AI company's capabilities added, could accelerate to 30 to 50% in 2026 and beyond. Catalyst 5. Government attention. The Commerce Department just invited robotics companies to Washington, a direct signal that physical AI is a national strategic priority for the United States government right now. The big picture. Real commercial deployments. Real and growing revenue. Partnership with the most powerful company in artificial intelligence just announced. Pause. Government recognition as a national strategic priority. Analyst price target implying 159% upside from current levels. Pause. 159%. Pause. Small cap, volatile, real risks. Robotics competition is intense, but a partnership like this, on a $2 stock, with real commercial revenue, is not a combination you see every day. The company is Richtech Robotics, ticker symbol RR. And yes, the AI company that called them was NVIDIA. Pause. Check NASDAQ.com for the current price before making any decisions. Let me bring this all together, because I want to make sure this lands for you. 5 stocks, all under $2, all with real businesses, all with real analyst upside. And right now, the market is offering all 5 at prices that reflect fear, not fundamentals. GERN, FDA-approved drug already generating revenue. 87% analyst upside. Pause. VXRT, oral vaccine technology. 43% earnings beat. 400% analyst upside. Pause. TRX, real producing gold miner. Gold at all-time highs. 300% return in 12 months. Pause. KULR, revenue up 116%. Bitcoin treasury strategy, 242% analyst upside. Pause. RR, partnership with NVIDIA. Real commercial deployments, 159% analyst upside. Pause. These are not lottery tickets. These are companies with real products, real revenue, and real analyst conviction, trading at prices that reflect market fear, not company reality. Obviously, all 5 are small cap stocks. Small caps are volatile and risky. These are not guaranteed outcomes. You must do your own research and understand the risks. But I think if you are not paying attention to these 5 names under $2 right now, you are going to be regretting that in a couple of years. Pause. If not sooner. That is your 5 penny stocks under $2. GERN, KULR, TRX, VXRT, and RR. If this video gave you value today, hit that thumbs up right now. It takes 1 second, and it helps this channel reach more investors just like you. Subscribe and hit the bell so you never miss our daily stock alerts here on Stock Alerts Daily. Drop a comment below which of these 5 has your attention right now. I read every single comment. See you tomorrow with another fresh analysis. Do not miss it. And as always, nothing in this video is financial advice. These stocks are shared for informational and educational purposes only. Always do your own research. Always check NASDAQ.com for the current price before making any decisions. Investing involves risk, including possible loss of principal.